Morning, everybody. It's Brian. It's Friday, August 14th, here for just a quick live update before we get started in the market. Today, like yesterday, we've got some news coming up. So from the forex side of things, we don't really have anything to do right at 7 a.m. Central, 8 Eastern, when the forex session opens here in the U.S. So the marching order, the plan for forex trading would be exactly the same as it was yesterday, or any other day that we have news or high impact news coming that would potentially throw a wrench in the works of what we're trying to accomplish. Right, we're going to use the currency strength meter. We're going to have a look at which currencies are actually moving post news. So we've got news coming up today, 7:30 a.m. Central Time, 8:30 a.m. Eastern Time. We've got the core retail sales reports that are coming out here, which will along with the preliminary labor cost and non-farm productivity. So there's a lot of news coming up, but the high impact news that the one that we typically see spreads really ride and kind of go crazy around in forex is this early morning news. It's at 8:30 Eastern, 7:30 Central, which is the retail sales report. Anyway, what we're watching for on that is we're going to let the report happen. 7:30 report hits, market goes kind of crazy right around that first minute or two, and then after that, as the spreads return to normal and participants come back into the marketplace, then we can start looking at what's actually moving. And over here we would just simply use the currency strength indicator to see which currencies are actually moving. Look for the strong currency, look for the weak currency, the ones that actually have some volatility behind them, some momentum behind them. Pair those together. That's the currency that we'd want to take the trading opportunities on. Obviously, also check to see what the volume indicator is doing. Are we moving in a direction that when we've got that divergence between the currencies, is that in line with what we're seeing with the buying and selling volume? Are we seeing volume that seems to indicate that we're going to see continued buying? Are we seeing a volume indicator that seems to indicate that we're going to continue selling? We want that to be in the direction of whatever that burst of divergence is, right? The volume indicator should agree with what we're seeing on that divergence burst on the indicator. Beyond that, double check your range indicator as well, the ATR indicator, just to see how we're dealing with the range. I mean, again, if you're in a downward trend and its average range is typically about let's say 90 pips, and you've moved 103 for the day, what's the likelihood of it continuing lower? Sure, obviously it could. You go another 200 points, right, or 200 pips, but what's the likelihood of it, right? So if you've already kind of met that range, you might be looking at reversals on an intraday trading basis. So just keep that in mind. All right, over on the future side of things, as we get into regular trading hours over here, let's see what the futures market has to hold. S&P, we hit that 3380 again, so we're hitting a pretty hard top up here, which is that all-time high, right? We keep pressing that high, and reversing back down. As it stands, this 3360, with the kind of the top level, 3350 as that lower level of the range here, it seems to be holding up pretty well. Every time it pulls back, it's finding buyers down here. So we hit the top, pull back, found some buyers, hit a top, pull back, found some buyers, hit a top, pull back, found some buyers. Now we're coming into a new day. Obviously, we don't want to try to front run it, and we want to see how the market reacts, and especially as it opens, how it reacts to these sales reports. It'll be interesting to see. There's still a lot going on, outside of just the market itself that can be potentially impactful. There's coronavirus concerns in Europe of things potentially slowing down or locking down again. You've got the stimulus package that's being debated and still on hold out there. You've got all kinds of election headlines. There's just so many things that can come out that could be potentially market impactful. But here's the thing. I mean, that's always the case. There's always something. the shiny object right now is coronavirus and election news. But there's always something. There's always something, right? So don't fall into the trap of that this is so different from any other time, because it's, yeah, I mean, it's a different thing today. But there's always going to be something, right, that's market impactful, which is why you've got to have a system. You've got to have a process. I'm a broken record. Brian, you keep telling me about the damn process. Stop talking about the thing is, that's it. There's no secret sauce. There's no secret indicator. There's no secret sauce. There's no, I don't know, name the shiny new object that's floating around, the Facebook ads and the email right now of the secret system that somebody just found that gives them the blah, blah, blah advantage. Bullshit. It really, I shouldn't say that. It's not. It's just a creative way of packaging something that's a known way of trading. It's what there's nothing new. There's nothing new. Anyway, I'm gonna go down a rabbit hole there. It's all about a process, and even those systems that have that shiny new object and they've got this, cool marketing behind them, they're teaching you something that only works if you follow that system. Don't think you're just going to download something and suddenly you're going to become a millionaire. It's not going to happen. You've got to follow the method. So whatever's being taught, whatever that method is that's being advertised and taught, it only works if you work it, right? Which comes back to having a simple system in the marketplace. Anything that only works during coronavirus, by the way, is going to be shit, because this is going to be over at some point. You need something that works no matter what's going on in the marketplace. Anyway, sorry about I'm getting off on a tangent. It drives me crazy. So what are we looking at over here? Let's see. So our 4-hour bias is long on the S&P. We've got a long 4-hour bias. The 30-minute bias, though, right now is short. We flipped over this big pullback in off trading hours. It reversed off of 33.80 and has pulled back down here. Came right to 33.50. 33.60 is the level we've got on my 4-hour chart over here. But remember, again, like I said, it's a range. You can't just throw a line on your chart. It's a range. There's a top level and a bottom level of any resistance area or support level or support area. It's an area, not a specific number, which I know we get caught up in a lot. And it's easier just to throw out a number than it is to throw out an area. But I think I've harped on that enough over months and months now to you guys have that kind of sunk in. Anyway, we're in a short bias on the 30 minutes crossed over. So what has to happen here? Right now, we don't have a trading opportunity because our biases are mixed, right? We want confirmed bias. We want these things to be lined up so that we've got something that says, hey, on a shorter term and on a longer term, the market's going this direction. That gives me confidence to trade in that direction, right? So right now things are mixed. What would have to happen here would be we'd need a good push up and close back above 33.70. If we can push up and close above 33.70 and hang there for a little bit above 33.70, that'll pull this moving average back over the green line back over the red line. To keep it really simple, it's going to pull our shorter term moving average back above our longer term moving average, and then at that point we can start looking for trading opportunities. So the breakout would be above 33.75. At this point, really 33.70, even if you're a little more aggressive, you could probably play that break of 33.70, which same level we talked about yesterday. You could look at that break above 33.70 and see if you can't pull a couple of points out of it. If we break 33.80 and can break and close above that, I really truly feel that we could see 3400. Of course, my feelings are irrelevant. As we've said before, the market doesn't care what I feel or what I think or what you think or what you feel or what anyone else thinks or feels. It just doesn't care. The market's going to do what the market does, driven by this much larger body that's trading and moving, right? So for right now, we've got mixed bias, which tells us no trades. With that said, you could be watching 33.70 to go long. If we break below 33.50, if we break below 33.50, close below 33.50, that, even though the 4-hour bias is not going to be changing until we get much lower than that, But you could even look at shorts below 33.50 if you want to be a contrarian trader. The other thing to look at shorts off of would be up here if it pushes to 33.80 again. It's the train has come and stopped here. We said that yesterday. Looking at 33.80 as a potential reversal point. With that said, and I know where you're going with this, you're flipping and flopping, Brian. Well, it's just the reality of things. We've talked about before. The train's moving in a certain direction. The train is going this way. It's going north. The train's heading north right now. And if you want to jump on the tracks in front of the train, hoping it's going to stop playing chicken, there's fine. It's stopped a couple of times at 33.80. It's come right to that area and it's stopped and it's reversed. It's maybe another train's coming down the track and it's got to get off that track and make room so a train can pass. I don't know. But the reality is it's come here and it's stopped a couple of times. It's been a good spot. We said it yesterday. It's a good spot for reversal. Looked like it held up overnight. Pushes there. Could hold up again. But remember, it's a counter trend trade. The train is moving north. So if you're standing on the tracks hoping it's going to stop there, it's very possible that it just blows through that and keeps going north up towards 3,400 stop. So you can certainly look at counter trend trades off of 38.80, but just have a plan to bail out. And the same thing on any trade. We should have a plan to bail out on any trade. So we maybe lose our backpack, but don't lose our entire life savings, right? Anyway, let's just leave it there. So on the trading method, where we're looking for the pullback trades, we'd be looking for nothing because we're in a mixed bag. We don't really have a trading opportunity on the S&P. It's mixed. The 30-minute is different from the 4-hour. That tells us don't trade, sit on your hands. If you don't want to sit on your hands, I've given you a couple ideas of where you could look for potential breakouts. I think I would look to break long though, if I were you, but I'm not. And again, my advice, I'm just some dude on the internet. Do what you will. I'm not telling you what to trade. That's on you to take the trades. But the method says sit on your hands because they're mixed bias. If you really want to do something, 33.70 as a break, great spot to do that from, breaking out in the direction of that longer bias. If you're contrarian, you could wait and see if we break through 33.50, looking for it to go short, or you could short it off of 33.80. Although, with that said, my gut tells me if we get to 33.80, if we push up there today, it's going to break through that, and we might see 3,400 just to close out the week on an all-time high. We'll see. I don't know. I don't have a crystal ball. Crude, mixed bag again. The 30-minute bias is short. 4-hour bias is long. We've been struggling quite a bit, right between 42 and 42.50 kind of. If you want to go a little further out, the channel is probably 41.50 and 42.75. But you could just call it even numbers if you want to. But we've been struggling around here. The reality though is same thing. The 30-minute is short, the 4-hour is long. That tells us to sit on our hands. You don't want to sit on your hands. You can look for breakouts. Breaking above 42.40 would be your long if you want to take it long from there. And then breaking down, if we break down below 42, that could certainly be a continued short from there for a little while. 42 has been a big number, holding up as both support, also resistance prior to that. So you'd watch that. If you do break down below 42, you might look at 41.50 or maybe 41.25 for profit taking if it does continue down there. Right. Gold is also mixed on us. So it's really today is one of those days where overall just looking at biases. We're looking at 4-hour versus 30-minute biases, and they're all mixed. With that said, it's probably a really good day to just sit on your hands. But if you've absolutely got to trade, you can't sit on your hands. We'll give you some ideas. So gold, 4-hour bias is flipped over to short. 30-minute bias is back to the long side again, although kind of at a decision point right now. If this pushes down here back towards 1950, our moving average will flip over, and the 30-minute and the 4-hour will be both confirmed as a short bias. But for right now, it's a mixed bias, and that tells us to sit on our hands. If you've absolutely got to trade something and you can't sit on your hands, look at a pullback to 1950 and see if we can take that as a bounce to the long side. And if we really pull back hard and we break down below 1940, which is our key level on the 4-hour, if we break down below 1940, that could be the opportunity to short on gold. All right. So, but I would prefer. I know it's a short bias on the 4-hour over here, but I would really. I'm kind of a gold bug. I would prefer to see long opportunities on gold. So I'd be looking at pullbacks over here and look to go long off of key levels or breaks of key levels. All right. So that's it for the day. So I'm just going to keep recapping this. The biases are mixed all the way across the board in futures. The biases are mixed. That means sit on your hands. That's what your system tells you. Sit on your hands. Don't do anything. If you absolutely got to do something, you've got this itch, I got to take a trade. Oh my God, I can't just sit on my hands. I can't go for a walk or do something I enjoy. I've got to take a trade. Then I've given you some ideas to take a trade. You've got some key levels that you could look at breaks of to trade, both long or short, depending on what your bias is. I will continue to warn you. I will continue to hammer this home. You're only going to see consistency if you have a consistent approach to the market. If you're constantly trading by emotion, you will never see consistency because your emotions change from day to day. They're driven by all sorts of external factors. How you felt when you woke up this morning, if you've got muscle soreness, if the dog or cat threw up on the floor, and you stepped in it on the way to your office, and all of that. Then you've got the news impacts of what's happening around you, what's happening with friends and family, what's happening with your local economy, what's happening to friends of yours that are business owners and they're struggling right now. You've got the greater level of news of what you're seeing on NBC and CBS and CNBC and just CNN and every news channel out there are just showing you all the horrible things that are happening in the world, and all of that stuff drives emotion internally, and then our brains are programmed to see patterns even where patterns don't exist. We're always looking for patterns. It's something that's passed down in our DNA from our ancestors. So there's all of these things that are coming in. If you're trading from emotion, you're never going to be consistent because you don't have a consistent emotion. And there's an infinite number of factors that are influencing what you see on the charts and how you interpret that. And you interpret it differently every single day based on the emotional pressures that are around you. So having a method, having something documented, as simple as that might be, it could be 2 steps. As long as you've got something that's simple, that has some quantifiable reason for doing what you're doing, that'll help you get consistent. And then through that consistency, you can start looking at ways to increase your edge so that when you win a larger number than when you lose, whether that's percentage wise or just number wise, whatever it might be. You need to win more than you lose. Mathematically, that gives you the edge, and then you can start looking at little tweaks from there once you get a good sample size behind you to increase that edge slightly. If you're trading from emotion, it's never going to be there. All right, I'll give you ideas if you want to. It's up to you. You trade whatever you want to trade. It's your money, But I can tell you from experience, you'll only see consistency if you have a consistent approach. You might hit a home run once in a while. Anybody can walk up, using a baseball reference, anybody can walk up to the plate, and even if you just closed your eyes and you swung the bat enough times, you'll eventually get a hit, and you might even get a home run, right? But that's just swinging a bat. If you're trading, you're putting your hard-earned money on the line. And if you can take an infinite number of swings. You can come out every day as long as you're alive and swing the bat. But with trading, you've got a finite supply. And if you keep swinging the bat and striking out, that's, you swing and you miss, you swing and you miss, you swing and you miss, you swing and you miss. That's chunks of your account that are going away. And pretty soon, there's no more account to take a swing and have that miss on, or even potentially connect for that home run. So again, it's in your best interest. Trade a plan. The plan today says, sit on your hands. Sit on your hands. Just turn your computer off. If you're so tempted to trade, turn things off and go, right? So anyway, I don't want to get on. I've been on 2 tangents today, so I'll leave it there. No more tangents. Yeah, if you guys have any questions, let me know. I'll talk to you later. Have a great weekend if I don't record a video this afternoon. Bye.